We've got another recap today. We're going to cover last Friday. That was May 9, yesterday, May 12, and today, May 13. So the last video we had was on Thursday last week. So we'll look at the levels and the game plan for each of these days, but let's just talk about what was going on as of Friday. So on Thursday, the SPY left us with this doji candle on okay volume, was right below the 90-period moving average or the 90-day moving average. However, as you'll see in the game plan, which was spelled out on Friday morning, they had already been up to this level before. I'm talking about the high of this doji candle on Thursday. So typically, when you see this type of signal at the end of a prolonged trend, like for example, if price was going up and they gave us a nice doji candle or a tail candle on high volume and other things were present, other evidence of overhead resistance, then you could possibly expect a bigger pullback. So with this doji candle here, what I said on Friday morning was that since they'd already been in this area, it was less important. If they could get above the high of Thursday's candle and fight this other overhead resistance, which, by the way, was not insignificant. This whole area was pretty important. The bulls had a lot to fight to get through it. Well, what did they do after Friday, which was not a whole lot? They just kind of stayed more or less sideways on Friday. They gapped above on Monday, and they haven't looked back since. However, I want to talk about a couple things where they're at before we get into these individual days and look at the game plan and what happened with our levels. See this trend line where price closed at today? It happens to be drawn from this high back on Friday, December the 6th. Yes, it wasn't the highest that the SPY got to. As price started to come down from this point, there started to be some clues that this was creating an area or a level, in this case a trend line, that was proven to be important later in the future. And if we even go back to, say, an hourly chart, look at this in more detail, we can go all the way back to the beginning of this trend line, at least how it was drawn, and I'll show you what I'm talking about. Went a little bit too far here, but here's the high back on December 6th. They got back up to it again here, couldn't get through it, starting to tell you something's important about this area, and now they're doing it again. So at this point, you have more than enough evidence to assume that this is a trend line that's going to come into play later down the road. And there were levels that we traded against in the future. Here's a few examples of why this level was important or this trend line was important. They gapped above it here. They got below it when they got back up to it here. There's a lot going on. This is an hourly chart, so think about what's happening on smaller time frames. This would have provided a lot of opportunities for trades along the way. Just want to point out that back in time, this level was important. When they finally got below it here, this is the last point here that we drew this trend line. SPY has not been back up to it since, and now they just did it today. This is Tuesday, May 13. My question is this all they're going to do? Are they going to bounce up from here and continue higher? I think this whole area is going to provide some type of resistance that the bulls might have to fight a little harder to get through. And also, if we look at the daily chart again, right above it, this journal area, right below 600 is important. And of course, 600 itself is a nice big number. So they've got some more fighting to do to go higher. I just find it interesting that they closed right here at this trend line, which has been significant for several months, pretty much all of this year, actually. So anyway, on to the levels and the game plan for Friday, May 9. This is what was provided to subscribers. You can read through this. Here's where I talked about that doji candle. My opinion was that it was less important. We've talked about that already. You can read through this. There was a lot of notes. I think it goes into another page here. So if you need to pause this video or slow it down or whatever to read it, feel free. But there's a lot of information that we had going into the day on Friday. And then this is Friday. These are the only two levels that were hit. It was a zone that was identified. And while it was important later in the day, it didn't work out so well for the first trade. As they were coming down into it here, would have been a long trade at each of these. Didn't bounce, got below it. And on this combined position, you would have quickly hit your 20-point max loss limit. So that was kind of a bummer. If you took that trade and then on the way back up, they were much more precise and you would have had a base hit on both extremes of this zone and had 8 points at a minimum. And that's what we're going to call it for Friday if you were playing by the rules. And later I'll show you a trade that I took. I kind of invented something that was up here. I felt pretty good about a bounce here. They did bounce, but I really didn't play it that well. Didn't have a ton of time for it to develop, so I let it go as long as I could, and I let it hit a stop limit. Lost 15 points on that trade, but we'll watch that. So we'll just move on to Monday. Here were the levels and the game plan for Monday, May 12th. And I'll scroll down so you can read the rest of it. This was after the gap up. Talked about what was going on, and that the SPY obviously was bullish. I mentioned that we had a level on the board from Friday at 582.15 that was important. It was important overnight. It was probably going to be important again on Monday, and we'll look at the chart and show you how that worked out. So here's the chart on Monday between the vertical lines. The only level that was hit was that 582.15 later in the day, and that provided a base hit. Pretty clear to see that. So playing by the rules, one base hit. You would have taken a short trade there, not attempted it again. However, like oftentimes, this level worked more than once. But as you might already know, I like to trade each level one side per side, long or short. One trade per side per level is good enough for me. For Tuesday, that's today, May 13, we can look at the behind the scenes. This is what was available to subscribers when they logged in. You can see the levels and the game plan. We're talking about the bulls still are bullish. They haven't lost steam. If we are looking at the SPY at face value, then we have to conclude they're acting bullish. Talked about the IWM. They were at a different place, but it didn't seem to make much difference today. The spiders continued to climb. So here are the levels for today. Let's see what happened. We had 3 levels that were hit, but just 2 base hits, and here's how it worked. So before 9:45, it was 9:42 Eastern. They came up and hit this level, pulled back pretty good. You could consider that the base hit because it was right before our cutoff, which is 9:45. So perfectly fine if you wanted to ignore this level and assume that was a trade, not risk it again. But if you had taken it, you would have gone into a short position at 9:46 when they came back up, spiked the level. Now, if you adjusted this down 584.47, you would have been filled. But they came within a penny or so right here. Here's the low a minute later, 584.09. If the Eve minis were moving more or less in sync, that would have been probably a tick or so from achieving a base hit. You might have got one, I don't know, but that's essentially a wash. If they didn't give you a base hit and came up quickly within a few minutes back to your entry level of 584.50 to 584.47, that area, you would have jumped out at a wash because it was too risky at this point, especially considering they kind of already gave the trade earlier right here. So this is a wash, no points at this level. 586.74. If you entered the trade at 586.69, went short and held on to this trade. I'll put some levels here just so you can see some reference. 586.69. So there we go. 09, that's your line in the sand. And we're looking for a base hit target over here. That's 4 points in the E-minis. And while they did get above the fumble threshold, the red line, nothing happened that would have told you to reverse the trade. You would have stayed in it, got rewarded down here for 4 points. And by the way, there was a level here I did not have on the board. I think it was 587.88, I think I had it at. Yeah, I literally just, they spiked through this level. Didn't have it on the board, and I can't answer why I didn't have it. At the time, I thought maybe it was a little bit too close to these other levels. I was kind of expecting bigger swings. I didn't put it on there. But you can see this area was important. If you knew that level was there, you would have been willing to sell again, or at least know that you had a safety net here. They were going to meet some type of resistance and pull back. But they pull back enough even for this one level here at 586.69 to give you a base hit of 4 points. And then, of course, the next level, 588.95, very easy to see how you would have got a nice base hit trade on that level as well. So 2 official base hits for Tuesday. We had a couple of recordings stitched together. The first one is Friday. You can notice the time here. So we talked earlier about inventing a trade. Didn't have a lot of time in the morning, and I kind of stupidly got into a trade early. I bought 2 contracts expecting them to bounce from this area. They did kind of eventually pull up a little bit, but I had to get out before 10:30 or so. So I had a 15-point stop limit and expected them to bounce a little higher than they did. So this was not a level that I had on the board, so I shouldn't have taken it. But of course, as you know, when they got down to this zone, they fell through it anyway. So just as well, would have lost money if I had taken that trade as well. But so as soon as this level is hit, or the stop limit is hit, I lost 15 points on that trade. This jumps to Monday, and I just have a recording for it for about a few hours until lunchtime or so, just to show that I intended to trade. I had some time, but didn't work out. So I just had the recording go till about 11 or so, or about noon or so. So we can watch that. So I think I have this slowed down as I get down to the stop limit. It goes pretty fast. There we go. Just real time. So anyway, cancel my target, my profit objective target up there. And this jumps to Monday, and it's sped up pretty fast because not a whole lot happened. So I got this thing adjusted after a few minutes. There we go. And I'll just move ahead here to show you that after really not doing a whole lot, they didn't hit any levels in the morning. And I kind of got bored, so made all the levels dotted. That's my indication that I'm finished, and let it go until about noon and stopped it and didn't take any trade. So when they did go up to this 582.15 later in the day, I wasn't around to take that trade. So nothing for me on Monday, and no recording at all for today, for Tuesday. So I missed the opportunities on Tuesday, way too busy at the office. Did not have time to get involved in the market as I would have liked. That brings us to the tracking log. So we see Friday, Monday, Tuesday. This is playing by the rules. You can read the notes. Friday, we gave some points back if you played by the rules, and a base hit on Monday and 2 base hits today. My trades look like this. That's 15 points I gave back on Friday, and then nothing for the last 2 days. So this is what 2025 looks like so far on these 2 tracking logs. That does it for today. I just want to go back and look at the daily chart one more time to talk about what could happen tomorrow. So after these drops we've had for the last several months, they found a bottom, and they came back up. The only pullback we've had in the last few weeks of significance is right here, this few days or week or so, from Monday the 14th of April through the 21st. They've been going strong ever since. This is just some consolidation. We talked about that in the game plan about what would happen if they got above. They did, the gap. We talked about that. So no big pullbacks. That's not going to guarantee that the bears are going to come out and just start fighting some arbitrary area to push price down. They missed their chance here, but they're getting into some more territory where the bears could come out. I just want to point out that the timing could be good for the bears to maybe make a stand sooner than later. No guarantees. We're going to see what happens in the overnight session. Levels tomorrow morning will be more refined, and we'll just take each day as it comes. And I still maintain that this trend line here is probably going to mean something in the near future. I don't think they're just going to ignore it and bust through this thing like it doesn't exist. Just my opinion for now. So thanks for tuning in. I appreciate your time. I hope you learned something. We'll be back at it tomorrow with new levels and a new game plan, and I will talk to you again soon.